Hi, my name's Chris Tubby. I am founder of Trading for Tomorrow, and here I just go through my macro outlook, and then in the second part I do just a little bit of chart analysis for you guys. So let's get on with it. Okay, so right, let's start by looking back at last week's action. So stocks the previous week had a really big drop, and that continued on Monday. Traders and investors, I think they, and I did post this on LinkedIn on Tuesday, they were just reading too much into the previous week's US data. Yes, I mean, I've been talking about there being a lag in. I've been talking about the US economy not being as strong as the data sort of displaying. But at the same time, recession, I just think talks of recession are premature. I can understand from the SARM rule, which is explained on my website, that suggests that, that one may be on the way. It's just based on unemployment. But I think possibly sort of more economic weakening rather than a recession. I just think a recession is doubtful at the moment. But of course, with the stocks, I mean, Buffett's selling some of the big stock positions that he's been holding, or at least reducing them, and certainly didn't really help the stock market. And although, there are other factors such as the data itself and, of course, investors exiting the big AI companies, now they're sort of either starting to look at other sectors or they're looking for AI startups where they can get better value. So economies are becoming more vulnerable. And of course, it's really down to the central banks to start to cut rates. And I do see more of that from September. Inflation, okay, it is still that little bit sticky, but and this week we will see some of the US and UK inflation data released, and of course that's going to provide us with more insight for potential rate cuts next month. I just think that central banks may have to just settle for current inflation levels because they're not that far away from their sort of optimum 2%. As I've explained before, that came from New Zealand. That's not as if it's sort of like a metric that has to be followed. I think, central banks do need to have a little bit of flexibility. And, that does leave the way for them to sort of just cut rates anyway. They've got to sort of prevent these economies from weakening too much because, of course, that will increase recession risks. And of course, with the US election approaching, voters are sort of still reeling from how much prices have increased in the US, well, globally, really. And of course, this could punish the Democrats in November. Now, obviously, Biden wasn't much of a competition for Trump this time round, but now Harris has replaced Biden. She is polling well at the moment. However, we know, well, just look at recent years. I mean, polls have just been so wrong at times. But Harris and Trump have agreed to do a TV debate next month. Of course, she can't perform worse than Biden did at the last one, but does she have the skills to best Trump? It's close at the moment, so Trump will really try and damage her during that debate to gain the votes if he can. Moving on to geopolitical things, Ukraine is making drone and missile attacks directly into Russia. Troops as well, just on the borders. They're trying to pressure Putin on home soil. Now, that could cause Putin to escalate things to the next level, which, is not necessarily just going to be dangerous for Ukraine, but it could be dangerous for the whole of Europe. And then, of course, Israel reportedly killed around 100 or so in an attack in Gaza. You know, they're still battling almost on three fronts at the moment. They've got Hamas, and then of course Houthi are continuing to attack ships in the Red Sea, and then the potential for Hezbollah to escalate things from Lebanon. Now, you know, I've mentioned this before about volatility, and it being August, and you know, with less traders in the markets, and you know, you have seen that since the beginning of August, if not the end of July. So you know, I wasn't making that up, and you know, you have to adjust your trading strategy and style around that, especially for your stops. Anyway, let's get back to last week. So indices recovered about 50% of the drop from the previous week. The dollar's a bit mixed. No one got really too excited about the dollar. It's just sort of flatlining at the moment. Obviously, it depends which currency you're basing that against. And Bitcoin closed the gap as it followed stocks. Now, gold had a mixed week again. And you know, that's following stocks. WTI bounced $5 from the lows of 72 that were made on Monday. So you know, oil's that little bit higher again. Now, you know how that's going to carry on. I mean, you know, with a lot of data out this week in the US, which I'm going to go through in a minute. You know, we are going to likely to see some strong moves. Now, China inflation rebounded to a 5-month high with CPI 0.5% year on year, and that was due to higher food prices. Now, China's got some key data out this week, which is house prices. Again, you know, because there's been a lot of pressure, downside pressure on house values in China. And of course, that's impacting the whole economy as well as local governments with debt. Retail sales are also out, and there's some employment data from China as well. Then there's plenty of data from the US and the UK. Now we should note that Monday is a Japanese holiday, so possibly the yen might get a bit of a move just because of that. And we also will get the monthly OPEC report if you're trading oil. But you know, oil impacts the sort of the economy. It's one of those. It's the one that sort of impacts the economy, but it's also impacted by the economy. So that's supply and demand situation. Okay, so let's move on to what's coming out in the US. We've got the inflation data. So we've got PPI, CPI. There's retail sales. Philly Fed, there's manufacturing data, housing data coming out, and Michigan sentiment. So there's a lot of data, so we will see some moves. And again, just remember the markets were a little bit thinner, lower volume, higher volatility. And then in the UK, we've got employment data. Now, watch for average weekly earnings, because that is something that's one of the Bank of England's metrics when they're sort of gauging inflation and potential rate cuts as well. Then we've got the retail price index, CPI, PPI, GDP, manufacturing, and retail sales. There's odd little bits of data in Europe, not too much. And then there's a New Zealand rate decision and Japanese GDP. So that sort of pretty much sums up my macro for this week. You know, just keep an eye on all this sort of employment data, anything that's inflationary, because obviously, you know, central banks are keen to cut rates, I would say now, or keener, but they need the data to back it up. Again, you know, it just comes back to this 2.5% inflation data. You know, I just think personally central banks should be just that little bit more flexible, because at the end of the day, you know, if you're arguing over 0.5% but you crash the economy and turn it into a recession, they're not going to be very popular. And of course, you know, that US election is round the corner and coming fast. Okay, so there's another couple of slides, and then I'm going to move on to part two, where I discuss and analyze a few of the products that I am trading. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Uh, Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1 week intensive course, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that inner trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And, this is to help you reach that next level time and again. And, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.